All right, let's talk about a concept that is, without a doubt, one of the most powerful forces in finance. It's a true double-edged sword. On one hand, it's the secret weapon that's built empires and fortunes. But on the other, it's a financial landmine that, if you're not careful, can blow up everything. We're talking about leverage.
You ever have that feeling, right? That you're just running on a hamster wheel. You put in more hours, you work harder, you grind, but at the end of the year, you're not really any further ahead. It's a huge frustration, and it points to a fundamental problem we need to solve. Working harder isn't the answer. Working smarter is.
See, most of us get caught in what's called the time for money trap. It's simple math, really. There are only 24 hours in a day. So if your income is directly tied to the hours you work, there is a hard physical limit on how much you can ever earn. To really break free, you need something that decouples your earnings from your time. You need a multiplier. You need leverage. So what exactly is leverage? Well, in the simplest terms, it's about getting more bang for your buck. It's using a resource, any resource, to amplify your own effort so that 1 unit of your work produces, say, 10 units of output, or 100 or 1,000. It's the key to achieving massive scale and breaking out of that time for money trap for good. Think of it as the secret sauce. It's how real wealth is created. But here's the first thing you absolutely have to understand. Leverage is not just about borrowing money. That's a big misconception. It actually comes in a whole bunch of different flavors. Let's run through them. First, you've got the classic, financial leverage. That's other people's money, like getting a mortgage or a business loan. Then there's time leverage, hiring a team. That's using other people's time. But then you get into the modern stuff, systems and technology, like an app that works for you 24/7. Marketing leverage. That's using other people's platforms, like social media, to get your message out. Network leverage is all about other people's connections. And finally, knowledge leverage is tapping into other people's expertise. All of these are ways to multiply what you can do, way beyond what's possible on your own.
And this quote right here, it just nails the power of modern leverage. He calls it permissionless. What does that mean? It means you don't have to ask a banker for a loan or convince a venture capitalist to invest. Nope. Anyone with a computer can create software, can start a YouTube channel, can write a blog. These things can reach millions of people and generate income for you literally while you're sleeping. That's scale.
And don't think for a second this is some crazy, risky strategy only for startups. The legends use it. I mean, look at this. A study found that even Warren Buffett's Berkshire Hathaway, for decades, ran with an average leverage of about 1.6 to 1. He cleverly used the cash from his insurance businesses, known as the float, as a sort of super cheap loan to go out and buy bigger stakes in incredible companies. It was a key ingredient to his success. Okay, but now we have to talk about the other side of the coin. This is where we get to that double-edged sword part. Because just as powerful as leverage is for building wealth, it can be equally powerful in destroying it. And knowing the difference between good leverage and bad leverage, well, it's everything. This breaks it down perfectly. Think of it like this. Good debt is an investment. You're borrowing money to buy an asset, something that you expect to either go up in value, like a house, or generate income, like a rental property. Bad debt, on the other hand, is for consumption. It's borrowing money, usually at a really high interest rate, for things that lose value the second you buy them. One makes you richer over time, the other just makes you poorer faster. So let's look at what happens when this goes horribly wrong. We're going to shift gears and look at a real-life cautionary tale from Reddit. It's a story that perfectly and tragically shows the dark side of this incredibly powerful tool.
I mean, just read that. Leverage will ruin your life. Those are the words of a day trader who rode the wave up and then crashed all the way down. His story is just a brutal warning to anyone who gets tempted by those get-rich-quick promises that leverage seems to offer.
Just look at this timeline. It's a total roller coaster. In 2020, in that crazy market, he takes 30 grand and turns it into almost $1 million using options, which are a super high leverage way to bet on stocks. But then what happens? He gets euphoric, overconfident. He thinks he's a genius. The market shifts and those leveraged bets just get wiped out. Then comes the worst part, revenge trading, making crazier and crazier bets trying to win it all back. And it just spirals.
And here's the thing that gets lost in the numbers. The cost wasn't just financial. He talks about the sleepless nights, the stress that wrecked his performance at his six-figure job, the strain on his health, on his relationships. That's the hidden tax of bad leverage. It doesn't just empty your brokerage account, it can completely drain your life.
So, we've seen the incredible upside, and we've seen the absolutely devastating downside. Where does that leave us?
What's the big takeaway here? How do we actually use this tool without getting burned?
It really all boils down to a few core ideas. First, only use leverage on high-quality assets, not wild gambles. Think like Buffett. Second, make sure your debt is cheap. The cost has to be way lower than what you expect to make. Always manage for the worst-case scenario and leave a buffer. Never go all in. And maybe most important of all, be disciplined. Emotions like greed and fear are gasoline on the fire when leverage is involved.
I think this quote is the perfect way to end. Leverage isn't good, it isn't bad, it's neutral. It is simply a tool that multiplies you. If you have good judgment, a solid plan, and discipline, it will multiply your success. But if your judgment is weak, emotional, or reckless, it will multiply your mistakes into absolute catastrophes. The tool isn't the key, the wisdom of the person holding it is.